this again.
Okay, so a lot of you have known my SIPs lists over the years, whether it's technology, some industrial companies, defensive, the whole nine. So I want to make it simple for each and every single one of you because a lot of times what I tend to notice is that like traders or investors, they get so enamored and so like caught up into so many different stocks and variations versus keeping it simple. And that's one of the things that I want to help you with today, especially if you're starting on your rolling force journey. You're probably sitting back and asking, Mark, what is it that I should be invested into, or what is it that I should be looking at? So here are my four stocks in which that I'm probably going to be trading from now until probably over the next 2 to 3 years. And so, of course, disclaimer, this is what I'm doing. So you can use it as, say, for example, a blueprint or a rudimentary, or if you find it valuable yourself and helpful for your own portfolio, mazel tov. All right, so let's get it off the bat. One of my favorite stocks in the entire stock market is TQQQ. So Teachable Q is the Ultra Pro shares and it's triple leverage. Now, of course, first things first, disclaimer, the drawdowns, when the market goes down, it hits. And so when it hits, we could be seeing like anywhere from 30 to 50% drawdowns in the Teachable Q position. But at the same token, when it's good in a bull market, then it's very, very good. So it's more so in the sense of just being able to understand exactly where we are in the market cycle. And the beautiful thing I love about it is because I love trading the NASDAQ. And it's just really the NASDAQ 100. So the top companies within the NASDAQ, ultimately triple leverage, and there you have it. And it typically runs cheaper than your average triple Q position, no matter how you slice it. So that's one of the things, that's one of the reasons why I fell in love with Teachable Q. And here's the cool part. It doesn't matter if you're trading the option or if you're buying the stock. So if you're buying the stock, you can literally just buy it when it literally has its significant drawdowns. And so, for example, when the stock itself hits a drawdown of 50%, you buy the stock and ultimately just sit there and wait.
Wait, Mark said 50% drawdowns like that was a little rainstorm. Bruh, that's not a correction, that's a coma.
Now, the thing is with triple leverage positions, you don't stay there forever. So essentially, you just got to get an idea of when to get in as it pertains to market cycles and then be about when the market cycle has completed. Simple.
So I wait for it to drop heavy, then hold the leap while the cycle resets. Damn, that's actually genius.
I think the next stock, I think that everybody kind of has an idea of where I'm going with this. But I'll just say it, Nvidia. And the reason why I choose Nvidia is because of the fact that, don't get me wrong, I love AMD. So if you want to go with the cheaper option that still shows that it's going to grow alongside with the regular semiconductor space and alongside with Nvidia, but just at a distance, then choose the AMD. But the thing that ultimately will dictate the market, though, as it pertains to the technology sector, is now Nvidia. Nvidia has already captured the semiconductor space, and now they are also defining the AI space. Like, they are the major component as it pertains to hardware, as well as also within the software and execution of infrastructure within artificial intelligence. From its tools with Omniverse, which I'll do in another video where I can review some of the tech so that way you can get an understanding of why these tools are so powerful and why is it that Wall Street and the rest of the world love building using NVIDIA or testing its models with NVIDIA. But I think that that's the secondary moat that they built around the initial moat, which is the semiconductors.
Yo, moat around a moat. I ain't even finished the first moat. This man talking on Omniverse like I'm supposed to just know that.
So the semiconductor space for NVIDIA would be the first moat because of the fact that they just dominate and they keep innovating at a rapid pace. The second moat that they build around that is the software that ultimately supports the hardware and also can support other infrastructures, which is ultimately going to be just magnanimous. When you think about NVIDIA Drive, where they are able to test, say, for example, taking tons of data as it pertains to driving autonomous data, and then resample that, and then also resimulate it, and then also recreate the world around it, that's huge. And that's just one component. We haven't even talked about, say, for example, digital twins, where you're using it with, say, for example, companies like Boeing, where they're able to essentially, like from the stuff that the engineers do, the digital twin comes in and continues that work. So That's one of the main reasons why I'm a huge fan of Nvidia. Though I will say this, the one and only drawback to that is, of course, tariff and trade wars. So if we find ourselves in a full-blown trade war, especially with China and other countries, that could put some pressure on Nvidia's stock. But outside of that, I don't really see any. I don't really see any significant catalysts that stop Nvidia from ultimately shining bright. The next company that I would probably also add to this list, and this is probably going to be a controversial one, is actually going to be Tesla. Now, I choose AI over EV right now, but if Tesla is ultimately going to get its act together, and if Elon Musk has ultimately found religion,
He said if Elon finds religion and gets it together, do I write that? Is that a catalyst or a prayer request?
and ultimately has cleaned his act up and realizes that, okay, hey, I've got to lead this company and get back to the innovation and also pushing the boundaries as it pertains to technology to move it forward in not only autonomous driving, but also in autonomous humanoid robots, which he's kind of falling behind in. But if he can pick up that slack and also take Tesla to the next stratosphere, then we're looking at another trillion-dollar company. And what I mean by another trillion, meaning that it goes from 1 trillion to probably 2 or possibly 2.5 trillion. And so again, the upside to that is phenomenal. Now, a lot of you knew that I had sold a portion of my portfolio of Tesla when I had announced it earlier this year. And I stand by that. I'll talk a little bit about that later on, maybe in another episode, as it pertains to what is it that I did after I sold the Tesla stock, because it opened up a whole new opportunity for me, but that's for another day. The things that can ultimately hinder Tesla is, one, not being able to innovate fast enough to ultimately get back into the lead. Two, not being able to essentially sell vehicles. And that's a major headwind right now. But if they can get out of the temporary headwind and get back on track, and if they start to revitalize the brand and also like fix its reputation amongst the market, that's a lot of upside opportunity for Tesla. And of course, trade wars. You can't escape it. It's going to literally have impact across the entire space. So there's nothing that we can do about it. It just is what it is. The next stock that I have that's on my list is actually Microsoft. Now, a lot of you are sitting back and saying, Mark, these are all tech companies. Shocker. Hey, tech, Mark Monroe. Have we met before? So here's the reason why I like Microsoft. Now, outside of the typical stuff that Microsoft does as it pertains to its AI, its software services and software products, and its data center activity, those things are all great. The thing that ultimately that I'm looking at as it pertains to Microsoft's like next celestial movement is its investment in OpenAI. Owning 49% in OpenAI is huge, especially since we're seeing OpenAI grow at astronomical rates.
Wait, Microsoft owns 49% of OpenAI? Yeah, okay, now I feel dumb for not already holding that.
So this is going to be something to definitely pay attention to as it pertains to like, okay, hey, well, what happens to Microsoft stock if OpenAI goes public? What is the upside opportunity and potential there? I think that OpenAI's opportunity when it does go public, especially if they go public while they're still in the process of growing, then that's going to be probably a golden ticket stock for a lot of people out there. For those in whom which that never had their Apple moment or their, their previous like Magnificent Seven stocks, this will probably be one of those stocks that will ultimately be in that stratosphere very quickly. So something to pay attention to. But yeah, so I'm looking at it in the sense of that 49% holding interest in OpenAI and all the things in which they're doing, and then it comes right back into Microsoft. I think that that's a huge advantage. And on top of that, the partnership in which that they work with other players like Allah and Nvidia, I think that that's huge for Microsoft. So huge upside potential and opportunity for them. Now, the fourth stock. The fourth stock is ultimately going to be very, very simple. It's not actually going to be even a company. It's the S&P 500. So on one side, you got Teachable Q, which is a triple leverage. But if you don't want all that smoke, just come back over to the S&P 500. Now, a lot of times what people do is they just add to the S&P 500, they hold it, and they essentially just add on just to decrease their cost basis when the market takes significant dips. Now, if you're trading the stock on, say, for example, Leaf Strategy, then hey, then you're pretty much setting the 1 to 2% target for the year, and ultimately, if the S&P 500 grows at a 7% compounded interest rate over X amount of years, if you're setting a 1 to 2 year target, then that's actually a pretty solid move. Now, of course, market dynamics play a huge role. So when we think about the S&P 500, that's the total market. So that's all sectors. So anything that can have impact on all 11 sectors or within the top 5 sectors, those are the things that you want to be attentive to. But outside of that, I mean, everything that I've said about like the other 3, including Teachable Q, Nvidia, and Tesla, and Microsoft, those are the things in which that you're going to want to pay attention to. So I think I did more than 4 stocks, but I gave you the bonus, which is the S&P 500. Now, it's up to you as it pertains to how you use it. Now, let's correct some things as it pertains to my rolling 4 strategy. The rolling 4 strategy is not for a person to literally trade it once and only once per year. It's supposed to be 4 trades a year that span out either a year or 2 years per trade.
Oh!
Man said 4 setups, not 400.
I've been overtrading like I'm getting paid per click.
If we're gonna do the strategy, then let's make sure that we do it correctly. And so, a lot of you are also probably asking yourselves, okay, well, Mark, when will that opportunity hit? Well, it's now June. I'm filming this video today in June. I think it's June 4th or something like that. And so what I want you to be focused on and over this month is looking for opportunities where the market gives you volatility and where it gives you openings as it pertains to, hey, signs of weakness, signs of exhaustion within the market, and looking for areas in correction. A lot of times people like to run from corrections or bear markets, but those are the moments in which the opportunities are made, and those are the times in which that you take advantage. Now, we saw that opportunity in April. Now, will we get that opportunity retest from now until, let's say, September? I don't know if that's possible. Could I see us having a 5% pullback or 2.5% pullback? That's possible. Could I see us going back to retest a 10% correction? That's possible. But the likelihood of it is probably looking like more of a 2.5% to roughly 5% move to the downside. And you just got to be ready. So probably around the time of mid to late July all the way up to September. Now, of course, things to also take into consideration, the Federal Reserve. We're probably expecting the Federal Reserve to probably cut about 1 or 2 this year in 2025, depending on what the data reads. So be mindful, be ready, but ultimately, that's your playbook from my sip list. So if you want more, keep sipping with me. But until next time, I'm Mark Monroe, and this has been Straight No Chaser. I'll see you in the next one. Peace.